All right, welcome back. You've made it to day 2 of our 50-day journey. Now, today we are going to do something absolutely crucial. Before you even think about putting your first rupee into the market, you need a map. You need to understand the playing field. So that's what we're doing today, laying out the entire landscape of the Indian stock market. Let's dive right in.
I mean, this quote right here, it hits the nail on the head. So many people just throw their money into the market completely blind, but that's not going to be you. See, knowing the basic rules of the game is literally the only thing that separates someone who's just gambling from someone who's making informed decisions. Our goal today is super simple: get you into that second group for good.
So first things first, where does all this trading, the buying and selling, actually happen? It's not just floating around in the ether somewhere. The stock market has actual places, real arenas where the action unfolds. And here in India, we've got 2 big ones. Okay, so here's the deal with the 2 exchanges. You've got the BSE, the Bombay Stock Exchange, that's the old-timer, home of the SENSEX. But then you've got the NSE, the National Stock Exchange. And honestly, this is where almost all the action is. The trading volume here is just massive. So, pro tip, when you hear someone on TV say the market is up today, what they're almost always talking about is the NSE's main index, the NIFTY. That's the one to watch. All right, so we've got our arenas, the NSE and BSE, but in any game you need a scoreboard, right? How else would you know who's winning or losing? That's exactly what the NIFTY and SENSEX are. They're the big, bright scoreboards for the entire market.
Let's break this down. Look at that first one, the Nifty 50. For 99% of us, this is the Indian stock market. It tracks the 50 biggest companies on the NSE. If the Nifty 50 is up, it was a good day for the market. Simple as that. Now, SENSEX is kind of the same thing, but for the top 30 companies on the BSE. Then you've got these other specialized ones, like Bank Nifty for, well, banks, and Midcap for the up-and-coming companies. But honestly, if you're just starting out, just focus on the Nifty 50. It's your guide.
Now, this might sound obvious, but it's a super important rule you can't forget. The market isn't open 24/7. Nope, it's not crypto. It has a strict schedule, just like a regular office. And you absolutely have to know these timings. So, the main show, the time when you can actively buy and sell, is from 9:15 in the morning to 3:30 in the afternoon, Indian Standard Time. That's the big window. But you'll see there's a pre-open session, which is super interesting, and an after-hours session, which is mostly for placing orders for the next day. Let's talk about that pre-open part for a sec. Have you ever looked at a stock at 9:15 a.m. and it's already jumped way up or dropped way down from yesterday's close? That's called a gap up or gap down. And the reason that happens is this little 15-minute window called the pre-open session. Basically, from 9 to 9:15 a.m., the system gathers all the orders that came in overnight and figures out the fair opening price. It's pretty cool, actually. Okay, pay close attention, because this next part might be the single most important thing we talk about today. You have to understand this. Not everyone in the stock market is playing the same game. It's like one giant sports complex where you have a cricket match, a football game, and a marathon all happening at the same time.
Just look at how different these games are. On one end of the spectrum, the safest lane, you've got mutual funds and SIPs. That's where you're basically saying, hey, Mr. Fund Manager, you handle my money for the long term. Super low risk. Then there's delivery, which is what most people think of as investing. You buy a stock and hold it for weeks, months, years. Then things get faster. Intraday is when you buy and sell the same stock on the same day. High risk. And then you get to the wild side, futures and options, or F&O. This is high speed, high leverage, and extremely high risk. We're talking completely different universes of risk here. This just sums it up perfectly. Someone putting 5,000 rupees a month into an SIP is technically in the market, so as a professional options trader, but they are playing completely different sports. One person is planting a mango sapling hoping for fruit in 10 years. The other is trying to surf a tsunami. Both are in the water, but the game, the risk, the mindset, it's night and day.
Okay, so we've covered the what, where, and when of the market. We know the different games people are playing, but who are the actual players? Who are the teams on the field whose buying and selling is actually moving the needle every single day?
Let me introduce you to the 4 main teams. First up, you've got us, retail investors. That's you, me, our friends, regular folks. Then you've got the big guys, the heavy hitters. The FIIs, or foreign institutional investors. Think massive investment funds from New York or Singapore. And their Indian counterparts, the DIIs, or domestic institutional investors. We're talking about giants like LIC and our big mutual funds. These guys are the whales. They move so much money that they can literally dictate which way the market goes on any given day. Just look at this number for a second. 2,000 crore rupees. It's hard to even wrap your head around how much money that is. Now imagine that entire amount getting pulled out of the market in a single day by just one of those big teams. What do you think is going to happen?
Well, this is what happens. When those FIIs sell 2,000 crore worth of stock, that creates immense pressure, and the market almost always falls. But here's where it gets interesting. A lot of the time, you'll see our own domestic giants, the DIIs, step in on those very same days and start buying. They absorb that selling pressure. It's this constant tug of war playing out every single day between the big foreign money and the big domestic money.
So, let's pull all of this together. We've looked at the stadiums, the scoreboards, the clock, and the teams. Now, let's talk about the most important person in all of this. You. What's your big takeaway as you get ready to step onto the field?
This is it, right here, the big lesson. The Indian stock market is not a casino. It's not a lottery ticket. It's a well-defined system with a structure, with rules, with specific timings, and with different lanes for different people. And just by understanding what we've talked about today, you are already way ahead of most people who just blindly dive in.
So, I'll leave you with this question to think about. After hearing about all these different games and players, who are you? What kind of participant do you want to be? Are you the slow and steady SIP investor building wealth for the future? Do you think the fast-paced world of trading is for you? Or, hey, maybe you're still just trying to figure it all out, and that's perfectly okay. The most important thing is to know which game you're playing. Think about it, and I'll see you tomorrow for day 3.